What's up, everybody? My name is Vincent. Welcome to Cryptolution, where we talk about everything under the moon in the crypto universe. We have a very special guest on our channel today, and that is none other than the founder, CEO, and CIO of Morgan Creek Capital, and that is Mark Yusko. Mark, how are you doing today? Thank you for being on the channel.
I am doing great. Thank you for having me on, and I've been actually looking forward to this conversation for a while, and kind of in y'all's honor, and you're going to talk about a lot of different things. You already said it. All things go to the moon. I'll see if I can make this happen. But I did wear a little sock game today.
No.
Oh my goodness.
Oh my
Oh
gosh.
my goodness.
Come on. I swear.
The rocket ship to the moon sock game. Now those come from my friends at Mount Socks. I love the name of that company. So I do wear, Bitcoin related socks every day, but I picked up the moon socks today for the show.
Well, your athleticism is outstanding. I'm sure like people walking through the office are like, what is Mark doing right now? But
Exactly.
I do want to introduce also our co-host. We also have a special guest, which is Leonidas. He is the host of the Ordinals show, both on Mondays and Wednesdays, but he's also a creator and community leader of Dog. Leonidas, how you doing, brother?
Hey, great to be here. I'm super excited for this. I wanna hear Mark talk mostly.
Yes.
I've been looking forward to this as well, but super honored to be here, Vincent.
Absolutely. So let's get it started. So, Mark, the first question that we want to ask you today, and I think this is something that's kind of been brewing within everybody's mind, which is like, why is Mark into everything on chain in terms of ordinals and runes? So that's the question that I have for you today, which is, with this whole innovation behind ordinals and runes, just as for instance, how did these ecosystems first come onto your radar? And
Yep.
what initially signaled to you that they were worth a deeper dive?
So great question. And look, I'm old, right? Got the white hair to prove it. I'm not the usual, affectionately crypto kid that most people, or degen that most people talk to. But I came to the space naturally in the sense of the short version of a long tail, although I don't do short very well, but the short version of a long tail is I have a good friend, Dan Moorhead, who, everybody knows, famous Pantera Capital. And Dan was kind of the first institutional guy or part of what I refer to as the OMGs, right? The old macro guys. So all of us from, whether it's Dan, whether it's myself, whether it's John Burbank at Passport, or whether it's, Mike Novogratz or Dan Tapiero, all of us were macro guys, macro hedge fund guys. We studied macro, we invested in macro, and Dan actually ran a macro hedge fund that we helped seed. And he called me up in 2013. Now it's getting a long time ago, 12 years ago, and said, "Hey, come to San Francisco. I want to tell you something." I'm like, "Great." I'm dinner with my friend. I go out there and he says, "Hey, I'm shutting down the fund, and I'm going to spend the rest of my career in Bitcoin and blockchain." And look, in 2013, I was not running drugs on Silk Road. I was not a cryptography student. I had heard of Bitcoin, but I didn't really understand. I had two investments in blockchain related companies through Sequoia Capital and August Capital venture funds. And so I kind of understood that it was the evolving infrastructure layer for, the next innovation in compute. And a lot of people have heard me talk about this already. You guys have probably heard it ad nauseum, right? Where I go back to, I say my life actually follows computing in the sense that 1954, the mainframe computer is invented. My dad was one of those guys who sold and installed mainframe computers. I come along in 1963, and at the time, the center of the universe was up in Boston, Massachusetts, Burroughs and Wang and Unisys and DEC, Digital Equipment Corp. And I come along in 63, 5 years later, there's an innovation out in Silicon Valley at Fairchild Semiconductor, and the center of the universe shifted to Palo Alto, and little companies like AMD and Intel were formed. And then 14 years later, and it's always 14 years. Now, why is it always 14 years? Well, young people invent everything. because old people don't want to change and they don't ask. They never ask, well, why do we do it that way? Why can't we do it this way? So young people come up with new ideas. And there was this young kid where I grew up in Seattle who said, well, why can't we have personal computers? And, Bill Gates and Steve Ballmer and the guys, I always joke, many of my friends don't work anymore because they were smart enough to go to work for those guys. I always defend myself saying, if you ever seen the picture, the original 11, you wouldn't work for them either. Now they're all multi-billionaires and I'm not, so I shouldn't make fun of them, but it's a funny picture. But Steve Ballmer's mom quoted the guy from DEC saying, no one would ever want a computer in their house. He has 18 billion reasons. He was right. Mom was wrong. People did want a computer in their house. We're using computers right now, right? So 14 years later, internet comes along, 1996. I'm working at my alma mater, Notre Dame. And we put a little money, $500K, into this company called Google. And I remember our board saying, that's a stupid name. Like, well, yeah, it is a stupid name, but now it's a verb. And like, why would you invest in the 21st search engine? We got Alta Vista, we got Web Crawler, we got Ask Jeeves. And I told you I don't do short well, but this will all make sense in a second.
It's okay.
So the point is that they weren't a search engine. You don't type in and then it goes and searches the internet, right? When I type in, hey, how do I beat the final boss in Pokemon Legends ZA, right? Which is, my son got me addicted to video games. So now I play video games. And so it doesn't search the internet for the answer. There's a bunch of people who've already asked that question because they're way better than me. And so it takes me to an index of where that information resides. So that 500K we put in turned into 200 million bucks.
Wow.
Like, okay, there should be a quad at Notre Dame called the Google Quad. And I'm like, okay, infrastructure matters. And infrastructure, particularly in the evolution of compute, really matters. Operating systems and blockchains are simply operating systems. So if you think about the operating system of the mainframe, it was COBOL and Fortran. Then, microcomputers ran on Spark. Personal computers run on DOS and Windows. The internet runs on TCP/IP. We're using it right now, voice over IP, right? Well, then in 2010, the mobile net comes along. And I actually remember being back in Seattle at Craig McCaw's family office meeting, big early investor in cellular. And I said to the guy, do you think the mobile net will be as big as the internet? The internet created $2 trillion of value. It's a lot, trillion. Mm-hmm. It's 1 trillion is $1 every second for 31,710 years. And he said, Mark, are you joking? Ask me if they want a computer, like whatever. Ask me if they want a phone there. I have 2. Yeah, so I don't need another one. So the mobile net, $5 trillion of value. Well, now 2024 comes along and we get the truth net, as I call it. And truth is important, right? For 848 years, financial services ran on trust. And I'm a financial services guy. I'm an old macro guy. And so banking, finance, insurance, accounting, auditing, all of that relied on trust. I have to trust that the bank will let me use my money. I have to trust that the brokerage firm will let me get my stocks because they're not in my name anymore. They're in the bank's name or the brokerage firm's name. Well, blockchain comes along and says, well, no, that's stupid. Why would you trust a third party when you can have truth, actual ownership? And so now I'll get to the part about how does this guy get into runes and ordinals? Well, I heard Casey and Leonidas and others talking about this. And so I started investing because Dan Moorhead said, hey, I'm going to do this. I'm like, all right, this is interesting. But in 2014, as I had done some work and got interested, I told my clients, hey, you should look into this Bitcoin thing. And they're like, are you a fucking idiot? We'll fire you. Like, that is a violent reaction. And I wasn't telling you, I said, put all your money in. I said, like 25 basis points, 50 basis points. But they were violent, opposed. And I'm like, okay, whatever. And the price from March of 14 to September went from $500 to 186. And I'm like, they were right. And then 8 weeks later, it was $1,000. I'm like, no, there's something here. And I did a lot of work. And I love telling this story because it's fun because it's my son. So my son was graduating in 2015, and I said one word, right? There's a famous movie, The Graduate, one word, plastics. I didn't say plastics. I said blockchain. I said, go out. He's wanted to live in San Francisco his whole life. I said, go talk to Dan, get a job at Coinbase. We were early investors in Coinbase. And he's like, I don't know, Dad. Maybe it's going to be a big deal. I'm just going to go KPMG. It's safe. Gets me in San Francisco. He says, you're going to hate it, which he did. 9 months later, he quit with no job, which is like a millennial thing. You just quit, not happy. Like, no, you get another job, then you quit. Now, God love him. He never asked me for money. 9 months without a job, finally got a job. And I'm super proud of him, right? He got a job. That company gets bought by Adobe. The boss gets fired. The boss tells him he better go find another job. But the new boss says, no, I need you. So we'll give you more and we'll give you stock. Then the old boss shows up at this company called Snowflake, hires him away to Snowflake for more money and more stock. And then they go public and to the moon. So love the end of the story. But when Coinbase went public, he calls me and says, all right, fine, Dad, you were right. But you're not as smart as you think you are. I'm like, oh, I told you to go to work at Coinbase. Like, yeah, but you didn't lever up the house and put all in Bitcoin.
Oh,
little shit. That is true. I did not. And so, and look, no one's crying for me. I have plenty of Bitcoin, but I wasn't smart enough to go all in. But that's part of my training, right? I'm a diversified investor. I have some venture capital. I have some buyouts. I have some stocks and bonds, less bonds. But I did start to buy. And I got my clients to finally buy. And then in 17, Pomp and Jason convinced me to start Morgan Creek Digital. So now I spend my life making investments in infrastructure around, we call it the ABCDs of the digital age: AI, blockchain, chips, and data. So anything that makes infrastructure work, we like. That tends to focus on Bitcoin oriented things, although we've made a lot of money in other things like Solana and a few others, Ethereum. But ultimately, I heard Casey talking about this idea of ordinals. And I'm like, this makes sense. And now, why does it make sense? Well, one of my big things about digital is on chain, right? I grew up off chain. Like, literally, I'm the guy, right, who left the house. Parents didn't know where I was. I had to be home when the streetlights came on. Like, that meme, that's me. That's my life. And so I was off chain. My older kid, so I have a funny family. I have two older kids, 36 and 34, and then a caboose who's 14. And my older kids grew up online, right? Now my youngest and the new generation is growing up on chain. And the difference is, to be truly on chain, I think you need proof of work, proof of stake, or proof of history, or proof of whatever. To me, doesn't have the same weight. And so the aha moment for me was thinking about, okay, we made a lot of money in Solana. Kyle got us into it, and it's been great. It's probably the biggest little bit turning into a lot that I've had in my career. I've had plenty of good investments, plenty of bad ones too. But that's probably, in terms of start with a small amount, growing to a large amount, probably the biggest IRR I've ever had. But I didn't get it. And I got in big trouble with the Solana community, because a couple of years ago, I was doing a thing like this, and I said, my problem is transactions vaporize. And they went ballistic.
Of course,
we never rolled back the chain. I said, I didn't say you rolled back the chain. I said that if I enter a transaction and the network gets overloaded, it shuts down, and my transaction vaporizes. And, well, you could resend it. I'm like, well, I could, but what if I didn't? So it's a little bit of semantics. And again, I wasn't accusing anything of doing anything bad. I was just saying that the tech wasn't working. And so that was the beginning of doing a deeper dive into what is a smart contract? What is a proof of stake system, or what is a proof of history system? And ultimately, I'm simplifying, and you guys are more engineers than I am, but I'm a finance guy who does this for, as a side job. My understanding is if I have a pointer on chain to an asset that sits on an AWS server, that's not on chain. That's
Right.
what most of the meme coins are. That's what most of the stuff in Ethereum world is. That means AWS could, at their discretion, shut me down and not allow me to get my property. If I'm on chain, like if I'm inscribed, and the word inscriptions really spoke to me, if I inscribe in those empty blocks on the Bitcoin blockchain, then the asset I own. And so, and I don't mean this in a braggadocious way, but I've been saying every stock, every bond, every currency, every commodity, every piece of art, every collectible car, box of fine wine, everything will be tokenized. I've been saying that way longer than Larry Fink.
Mhm.
I mean, I'm saying that since 2017, word for word. And it's cool when somebody powerful says the same thing you do and believes it. But if that's true, if everything that we own is going to be digital and tokenized, meaning it is going to be an NFT, a non-fungible token. Like, I don't like that NFTs are just thought of as JPEGs, like your
Mhm.
PFPs or my monkey JPEG, but it's all assets will be line items on a ledger. That's a better way to do it than a piece of paper in a file drawer in Dallas, Texas, which is how current stocks are held. And so if I'm going to do that, I want valuable things. Like I have a couple NFTs that I think are valuable. Some other people would say they're valuable because the price that's listed, what people would sell them for, seems reasonably high. I don't want that on a server that someone can turn off. I want it on chain.
Mm.
And so the other day I, said, and the dog army loved, right? That I said, yeah, dog is a meme coin, which I don't really get meme coins. I'm probably too old to just mentally handle it. But I do get that if meme coins have value, which clearly Doge has some value. Now, I don't like market cap. I think market cap's stupid, right? You take the number that, 10 Doge traded at, and you multiply by however many billion there are, and you get a market cap. Well, yeah, but if Cuban or Musk sold any, the price would go down a lot. So I
Mhm.
don't like the market cap calculation, but call it what it is. That amount on a chain where there's no developer activity or AWS has control doesn't seem like a good idea. But Dog did two things that spoke to me. One, put it on the right chain, which is the quote I had, and then location, like real estate. But the second thing it did was the free, and fair. And I got in big trouble with Bitcoiners about this, right? Someone asked me, well, what do you dislike about Bitcoin? I said, well, the only thing I dislike is it doesn't seem fair that if you happen to be running drugs on Silk Road or a computer geek way back in 2009, 10, that you got a disproportionate amount. Like, well, you could have been there. Like, well, yeah, but I wasn't. And I'm
Mm.
not saying it needs to be, we need to take billions of dollars and distribute like socialistically or communistically, but could it have been better if you said everybody gets some? Now, you don't have
Mhm.
to claim it, you don't have to use it, but then start the process of the proof of work and converting energy to value. And the hardcore maxis hate that. I'll retract it a little bit and say it's working pretty well. I kind of like it. But I did like the fact that, just by fact that I had a rune stone that put me in line to know about dog and therefore I could participate. So I kind of like that. Anyway, I told you I don't do short. That's like the longest answer I've ever given. So I apologize.
No, those details are actually very important because the viewers out there and the listeners out there need some context of your mental state, like how do you picture the market before people catch on to it, and also your history, because again, a lot of millennials may be watching this, or just a young generation that just don't understand where we came from up until today. And you just
Yeah.
briefly gave us a great history, especially involving your son and what he had to go through. And I just think it's very informative. I do want to pass it over to Leonidas, because Leonidas, when you did this, free and fair airdrop, you obviously did something that was very interesting that really shook up the Bitcoin ecosystem. But I do want to pass it over to you because I'm sure you have a question for Mark.
Yeah, so I want to double click on the "it's a meme coin on the right chain" comment. Like you mentioned, the dog army has latched onto that. I see posts of that every day since you said it. What do you think it is about meme coins and NFTs where, for some reason, like they get written off by probably a lot of your LP, like a lot of the people you're investing on behalf
Yep.
of, maybe because of the way people think about them? When I think of a meme coin on Bitcoin, I think of a scarce digital asset secured by the Bitcoin network, the proof of work security model. When I think of an NFT on Bitcoin, I think of basically a piece of digital art, no different than a physical piece of art that's inscribed into Bitcoin. Why is it that people seem so comfortable throwing away this true ownership that Satoshi gave us, and they're doing these pointers? They're maybe releasing their meme coin on some random. There's hundreds of blockchains that have meme coins on them. They don't
Yep.
seem to have a reverence for what makes BTC as valuable as it is, and they don't seem to have a reverence for taking those properties and applying it to all of our other digital assets, which are basically like little weird derivatives of BTC. So why is it that you seem to understand that so deeply, and everybody else is over here not learning from the most valuable, successful asset and running totally different experiments that don't seem to learn how Bitcoin became worth $2 trillion?
Leonidas, that is the question, and look, I tweeted this yesterday, right? Questions are way more important than answers. Our whole industry, our whole lifestyle revolves around answers, right? Influencers talking and news people talking and answers. Answers are a dime a dozen. Questions and asking the right questions and important follow-up questions is really the skill. So your question is at the heart of everything, and I ask it all the time because I I say this to my guys, like guys, we're not that smart, right? We're not rocket scientists. We're not like Casey when he starts talking about coding. I'm blown away because like that brain is functioning at a different level than
Right.
I'm capable of. And there are plenty of people like that, but that's not us. That's not me. But the common sense part that you describe in the question that gets lost, I can't explain, right? I can't explain why anyone would think that a non-scarce asset, but let's just take a chain where you can mint more of it at any time. That's kind of like fiat, right? That's kind of like
Mm,
what we're trying to escape.
Right.
And or the one I love to pick on, and this army hates me, right? The XRP army hates me. I don't understand how you do a drop to yourself, well, and the foundation, right? But basically yourself, because you're in charge of the foundation. And then you feed it out over the years to people by hiring influencers to talk about it and doing commercials and making political contributions. That's been going on. And that's the thing, that's been going on for hundreds of years.
right.
There's great pictures of they used to have these things called boiler rooms, bucket shops. And they would hire kids during, the roaring 20s to pass out pieces of paper to bystanders to, hey, buy this stock, buy this hot stock tip. That's the same thing. And you own all the thing that's not scarce or not unique or not, but you're selling it to people. And that seems like a bad trade. It's kind of like what's happening. I don't know if you follow this Oklo story, right? This nuclear power story. It's a husband and wife. They owned all the stock. They told people they're going to build this mini nuclear reactor. Like based on what? You've never built you never worked for a company that built a reactor. You didn't even publish any papers on nuclear reactors. And your application got rejected by the entity that would even approve it. So, but yet the stock keeps going up and they just keep selling. Or, the other one is quantum computer, Rigetti and D-Wave. I think the founder of D-Wave literally sold all his shares. So the fact that one or two people are getting super rich while there's this hope or hopium in the community, that just doesn't make sense to me. And so when I think about an asset that is truly scarce, whether it be a one of one PFP or a one of 10, a one of 10,000, okay, that's not as scarce, but there are scarce traits or scarce characteristics. But you say, well, but if there's monkey JPEGs, then I could have chimpanzee JPEGs and I could have gorilla JPEGs. Yeah, you could. But art has been doing that forever. Like, I like this piece of art back here. A friend of mine made it. I love it. Other people are going to say, oh my God, that's so ugly. And they don't have any allegiance to Notre Dame. And so they don't, but I like it and it has value to me. So on scarcity, an interesting story about art. So Nicholas Sparks, right? The writer wrote The Notebook
Right.
and then 100 other books that are all just The Notebook with different characters. And I love Nicholas, and he's super successful and he's a funny guy, but he's a Notre Dame guy. And you've probably seen there are these pictures, this artist, and he takes photographs of trees and then he paints over the photograph to make it kind of look three-dimensional and surrealistic. And Nicholas hired him like 15, 16 years ago to do a piece for him. There's a big tree down where he lives on the coast of North Carolina. And he said, all right, I want you to do this. And I want you to promise me that you'll only make one. And we're going to call this one, O-N-E. So he did. And Nicholas paid him $1 million. And everybody said, oh, that's so stupid. You could buy one of his paintings for $5,000. And he's like, yeah, but this one is one of one. And I guarantee, and I can't guarantee anything in life, but I can guarantee that he could sell that for more than $1 million today. And another one is, I don't know if you guys are Magic the Gathering guys, but Magic Gathering card game, right? So they did a Lord of the Rings collab a little bit ago, and they did one ring card.
Oh, yeah.
They only printed one.
Oh,
And
wow.
they caught the kid ripping the pack who pulled it, and his hand's like shaking, right?
Yeah.
Because
Oh, I saw this.
it's worth $2.5 million. Because it's not worth that. It's a piece of cardboard. It doesn't matter.
Mm-hmm.
It's like Steve Ballmer, right? Famous billionaire guy. He bought the Clippers for $2 billion. And everybody said, you're an idiot. It's only worth one. He said, I don't care. I want it. You know what the lowest valued team in the NBA is today? How much?
No.
8.
Wow.
And the Clippers are worth more than 8. So it's because they're scarce. So anything that's scarce in a fiat world will go up. Now, the cool part is we live in a fiat world. So I had the aha moment about infrastructure. My second aha moment was when I realized what fiat was, and this came, I used to write these very long letters to my clients. And like that, remember I told you about the telling clients to buy Bitcoin in 2014? That was a 41-page letter. One paragraph said buy Bitcoin, and they're like, you're an idiot. Now, I guess I should be gratified that they read the whole damn letter. My wife's like, no one's ever going to read that. And I said, no, I don't really care because it's not for them. It's for me. The process of writing was how I think. And so now the funny part of that one letter was the next paragraph was about Saudi stocks, which I will argue is more objectionable than Bitcoin, but no one said that was wrong. They just said Bitcoin is wrong. Now, that was when the price was 500. It's a lot higher today, so it turned out okay. But I also wrote this very long letter, and in it, I did a research on the formation of the Fed. And most people don't know that in 1776, we adopted the dollar as our unit of money, right? Now, why did we do that? Well, we borrowed the term from the Dutch, the dollar, and so that's how we got the dollar. And from 1776 to 1913, a dollar was worth a dollar. There was no such thing as inflation. Now, we had a depression in the 1840s when we went off the banking system. It was horrible. Andrew Jackson, screwed up for 20 years. And then we had a civil war and another 20 years. So in those two periods, a dollar didn't work and we had other monies and, you had Confederate money. And so, but other than that, from 1776 to 1913, a dollar's worth a dollar. And then in 1913, we created the Federal Reserve. And the Federal Reserve, since then, a dollar is now worth 2.5 cents because we can create dollars out of thin air. So when doing the research for that, I had the second epiphany that any asset that is a store of value, gold, real estate, in some ways, companies or stocks, they, in most cases, don't get better, right? A single ounce of gold today, 5,000 years ago, 3,000 years ago, 100 years ago, a single ounce, if you exchanged it to someone, they'd give you a fine person's suit. From Cleopatra's time to a suit of armor to a zoot suit in the 20s to Savile Row today. A single ounce. So the gold never changed. Same thing with Bitcoin. One Bitcoin is one Bitcoin. One Bitcoin in 2009, one Bitcoin in 2013, one Bitcoin today. Nothing changed. What changed? The currency that people buy it with. So if you happen to live in Venezuela, you've never seen a bear market in Bitcoin because the Bolivar has gone down 99.99%. If you live in Turkey, you've never seen a bear market in Bitcoin because the lira has gone down 99.9%. If you live in Argentina, you've only seen one very small bear market in Bitcoin. In the US, we've seen a little more volatility, but in the end, we're higher today than we've ever been because here's a crazy stat. We've been a republic for 249 and a half years. So 250 years next summer. So for 245 years, we printed 20% of all the money that's ever existed in the United States. In the last 5 years, we printed 80% of all the money. Well, if that's true, then the price of gold should have gone up a lot. It did. Price of Bitcoin should have gone up a lot. It did. The building I'm sitting in theory, according to Zillow, right, is worth twice as much as it was 4 or 5 years ago. No, it's not. It did not grow. It did not get more efficient. It actually has a bunch of leaks and we have to pour money into it. So it's not getting better. The money's getting worse. And so that epiphany meant that, and so Leonidas, to answer your question, anything that's scarce to me has value. So a PFP can have value, an NFT, and I don't like the term NFT, non-fungible token, because people don't know what the word fungible means. I like digital property rights. What an NFT is it's digital ownership of something of value, property. So a property could be a piece of art, could be a car, could be a house, could be, a stock certificate, a bond, it could be a piece of Bitcoin. It doesn't really matter, but digital property rights are going to dominate everything. So now, if I want to have digital property rights, I don't want them in a place where they can be taken away. I don't want them on a chain. I also get in trouble with the Cardano people and as much as the XRP people, right? And why? Look, I've been in digital venture capital, meaning Pomp and Jason and I launched a fund in 2018, and I've now launched 4 funds, and we've invested about $500 million in companies around the digital asset ecosystem, 100 companies. And we've looked at thousands, couple thousand, not one not one building on XRP, and not one building on a Cardano. That's just mathematically not possible, right? Think about it. I've seen hundreds building on Solana, Ethereum, hundreds building on Bitcoin, a few building on Avalanche. It's just not possible, if there was actual activity going on, that we wouldn't have seen any in Cardano or XRP. So to build a meme coin on that, or to build anything on that, doesn't make sense to me. Meme coins generally I struggle with because, Pomp says it's monetizing attention. And I don't know if he coined that term or someone else did and he stole it. Picasso said, good artists borrow, great artists steal. So, and there's nothing new in this world, but monetizing attention is fine. And clearly Doge, despite no developer activity that I can see and no use cases that I can see, Dogecoin does have, in theory, based on market cap, a decent amount of value stored compared to fiat. Okay, but if it's not on a good chain, why would you keep it there when you could come with y'all and go to dog, just drop the E? In fact, I think I'm going to start tweeting that. Let's all drop the E, right? All you dojis, come to dog. Maybe someone's already said that, but I just thought of it this morning. But, let's all drop the E and just go to dog, because, and look, this is causing stress between, what's his name? The developer, the super Christian guy, actually super Catholic guy.
Jr.
Yeah. Who hates this, right? He wants to fork the chain because he doesn't want pollution on the chain. I'm like, if the block is empty, that was minted years ago or minutes ago, or it doesn't matter, if it's empty, what difference does it make if we inscribe? And actually, let's call a spade, as the block rewards continue to shrink, which to me was one of the greatest coding, design, whatever you want to call it, engineering feats in history. Like, it's a big statement, but building in the halving schedule into Bitcoin makes my mind explode, because it does a couple things. One, it encourages mining activity. It also encourages price movement upwards, which encourages attention, because if the block rewards get cut in half and the price doesn't adjust, then half the miners go out of business. They're not going to sell, so the price is going to adjust. So genius. But as those block rewards fall, we have to incent the miners. Well, transaction fees are beautiful. Mm-hmm. Well, if we have empty block space, why wouldn't we do that? Right. So all of that just made so much sense to me. Look, I'm just a practical, logical person. And if I can inscribe my PFP on Bitcoin blockchain in a SAT, and I love the fact that some of the stuff I own is on like the original Satoshi sats. I mean, mm-hmm. That's just kind of fun. Like, why is that bad? I don't understand.
I think people will absolutely find any reason for something innovative to be bad. I mean,
yes, amen.
If you look back, when you were calling on CNBC, this is the famous clip that everybody's seen Mark Yusko on, right? He's literally being scolded by CNBC anchors and news hosts saying, why would you buy Bitcoin at 8,000, even if it drops to 5? And you said, buy it. You gave your reasons. And because of these principles that you've learned for yourself and shared publicly, look at where Bitcoin is at now, right? 124,000. And the same thing with the basketball team, buying it at around 2.5 when now the minimum is around 8. Yeah. And something about that is a huge lesson, which is you got to spot these early signals before everybody else does. And not everybody can do that. And this is usually the 1% like yourself that can spot these before the masses come along. And so I do want to, sorry, did you want to say something?
No, I was going to double tap on that, because look, it is my pinned tweet on Twitter, which I will always call Twitter. I'll never call X. Sorry, Elon, change it back. I hate the name X. But here's the thing. My pinned tweet is the greatest wealth comes from investing in innovation. Okay. To do that, you have to invest in something you believe in before other people even understand. And you'll be mocked and ridiculed for your non-consensus action, but it's totally worth it. And you said something, Vincent, that's important in the sense that if someone's livelihood depends on them not understanding something, they will not understand it. If someone's livelihood depends on fighting something, they will fight it, right? People say, why is Jamie Dimon? He's a smart guy. Why does he hate it? Are you joking? I mean, look, 838 years from the Medicis to today, the banks have extracted a fee every year. Today, it's about $7 trillion a year globally. $7 trillion of extraction of our wealth collectively, savings, transactions, all the nasty stuff. Like if you have a little bit of money in your bank account, JP Morgan will literally, it has software that processes your checks before your deposit so they can charge you an overdraft fee. Even though the money was going to clear, they mess with it so you pay fees. So they like their revenues. So he's, of course, going to say anything that threatens is bad. And so innovation is super important. And all incumbents will fight innovation. So first, they will ignore you, right? 2009 to 2015, bunch of nerds and geeks, go play with your magic internet money. Then they laugh at you. 16 to 21, bunch of nerds and geeks, ha, 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 look at your cute little PFPs. Then they fight you. Starting in 22, and I think through kind of 27, they're going to fight. Regulatory fighting, SEC, changing the rules. It's like the little thing on, remember when Bitcoin was classified a commodity?
Right.
Security? And everybody's like, yay, wrong, bad. We did not want to be a commodity. The reason they did that was intentional. All right. If no one's seen the clip of Leo Melamed from 2017, you got to watch it. So Leo Melamed was the former chairman of the CME, Chicago Mercantile Exchange, head of the futures markets. He's now chairman emeritus. In 2017, someone asked him about Bitcoin. He's like, don't worry, we will tame Bitcoin. Like, that's a weird word. Whoa. Why do you need to tame it? Well, because if they don't tame it, it obviates the need for the bank, right? Be your own bank is real. Like, remember that ounce of gold I was talking about? If I had a bar of gold, like, I don't know if you know Kyle Bass, the famous hedge fund guy, he would, as a prop party trick, he would reach under his desk and he kept a 26 kilogram Krugerrand from Australia, worth $500,000. Look, even if I had that bar of gold under my desk, which I don't, even if I was strong enough to break it in half, which I'm not, I couldn't stuff it in the computer to send to you guys. But with a couple taps on my phone, but I don't keep any Bitcoin on my phone. Don't sort of SIM swap me. People tried twice. I don't keep anything here. It's in cold storage. You're not getting it. So don't SIM swap me. But if I wanted to send it to you, I could with a couple clicks of a button, because I do keep some of Coinbase. But and that is amazing. And so Bitcoin is more divisible and more portable than gold. So it has all the benefits, scarcity, low stock or high stock to flow ratio, all the benefits of scarcity, and it's more divisible and more portable. That's why my thing on Twitter is 2.1 quadrillion, right? That's how many Satoshis there are. And someday we'll stop talking about Bitcoin because 85,000 is intimidating to people. But if we did it in Satoshis, it would be, fractions of a penny at this point. Mm-hmm. So we'll get there. But all of this comes back to why ordinals, why runes, why dog. Again, I'm not saying that dog is the be all end all. I know the army would love me to say it, but I do think it's interesting. And if you're going to own a meme coin, why wouldn't you want to own it on the best chain? Why wouldn't you want to be on Rodeo Drive instead of, on Main Street of Dubuque, Iowa? Nothing against Dubuque, Iowa, but it's not Beverly Hills. So I just think, or Times Square, right? Why don't you want real estate in Times Square instead of in Chapel Hill, North Carolina? So that just makes sense to me. The fact that the Bitcoin blockchain doesn't go down, right? I think it's at what, 20 minutes of downtime in 17 years. And it doesn't get overloaded. And yeah, it's slow, but that's okay, right? Slow is okay because you can either have slow you can have slow and secure or fast and insecure. I'd rather have slow and secure if it's something of high value because I don't need to transact my ownership rights all the time. And I can build a layer 2 and a layer 3. And that's where other things like transaction fees and inscriptions start to make some sense too.
Yeah, yeah. I mean, one of the things that you pointed out, which I'm capturing, is that usually innovation comes with the disruption. And that's what really changes like our economy and everyday life. I mean, even pulling out your phone, when Steve Jobs created that phone, it literally was disrupting mobile devices and put everything in a singular handheld device.
It's a supercomputer, to your point. I mean, it's not a phone. No one talks on it anymore. You just do everything. And you're 100% right. In fact, I retweeted this the other day. So there was an article in the newspaper, right? This paper thing that we old guys used to read in the newspaper in 1963, the year I was born, with a woman holding what looks like a Palm Pilot saying, someday you'll have a mobile telephone. She's far in the future. 10 years later, they made the first cellular call from one lab to another. 10 more years, 1983, the original phone that we've all seen in the movie Wall Street, the Dynatac, came out. It was $4,000, okay, for a phone, which in today's dollars, I think is like $12,000. So $12,000 to buy a phone. So only Gordon Gekko had it. And it wasn't until 1996 that we had a commercialized smartphone. And it was another 11 years before the iPhone, 2007. So disruption can take time. And that's why when people say, why aren't we moving faster in Bitcoin? I'm like, are you kidding? It's an S curve, right? It's a 30-year cycle. First 10 years, you get 6, 7, 8%. Then the next decade, you get the early majority and the bulk of the knee of the curve, of the S curve, and then you got maturity. And there's a difference between capability, which is what you are now, and your potential. And I've used this example, and people don't like it, but I think it works, right? I don't know if you've ever seen the picture of 9-year-old LeBron James.
Right? I have not seen that.
He looks like any 9-year-old boy. He's not super tall. He's not super big. He looks like a regular 9-year-old boy. And I posted that on Twitter saying, how much would you pay for this kid's future earnings? And people, oh, that's exploitation. I'm like, I'm not talking about slavery. Stop. I mean, I'm saying, look, if you could pay for someone's future earnings, how much would you pay? Be like, I don't know. Who is he? I'm like, well, I'm not going to tell you. How much would you pay? Everybody's like, I don't know. Not very much. Okay, now I'm going to tell you it's LeBron. How much would you pay? Oh, yeah. Well, I'd like to buy that. So his potential was huge. His capabilities at 9 years old, not so much. So Bitcoin at 17, my son's 14. I mean, 14-year-olds are capable. Some are really capable, but most are just emerging. 17-year-olds, same thing. At 30, this thing's going to be kicking ass. At 40, and it's my first boss had this great line, and it doesn't apply exactly anymore, but I like it, which was your 20s are for getting educated. And it doesn't mean just school, but learning, right? Your 30s are for building your reputation. Your 40s are for capitalizing on your reputation. Your 50s and 60s are for enjoying your reputation. So I think that works with Bitcoin too, right?
Mm-hmm.
The 20s, getting educated. The 30s, that's when, and so we're 3 years away. That's when the real knee of the curve is going to happen. And then everyone is just going to use it because it is a better form of money. And I will take a side here. I think runes and ordinals have a role in that vision of the future where Bitcoin is the chain to rule all chains. It's the one card, right? It's the Lord of the Rings card.
Ooh, yeah.
in one chain to rule all chains, that doesn't mean we can't have smart contracts. It doesn't mean that we can't have layer twos or dexes or other things. That's fine. But for value, why wouldn't you want to store on a proof of work chain? I've never had anyone explain to me why that's not the superior answer.
Yeah, what's interesting is that that's something that I do want to talk about just a little bit because right now, most of these other institutions are starting these ETFs with these digital assets on. I mean, Leonidas would like to call it a testnet chain, which I agree with. They're really a testnet to the mother chain, right? Leonidas, like what Bitcoin is. So
I've refrained from that a little bit recently because people get mad at me. I feel like I also have a lot of enemies like Mark. I'm a little bit too speaking my mind, but yeah, they're to a degree.
Yeah, but Linus, here's the thing. You can judge the quality of your ideas by the quality of your detractors. If no one cared, then you're not saying anything interesting. When you have really smart people or really powerful people that disagree or don't like you, then you're doing something right. So keep doing what you're doing and keep innovating. And so this idea of, look, I am on the board of multiple DATs, digital asset treasury companies. And I like those positions. And they're having varying degrees of success. MicroStrategy is the dominant player. They got to the full capital stack first. And what does that mean? Well, if you think about a digital asset treasury company, if all you're going to do is own Bitcoin, then what you need is the full capital stack that allows you to issue equity when you're above MNAV of 1, issue debt or prefs when your MNAV is below, and buy back your shares if you trade at a discount. So if you're just going to be essentially a store of value with a cash flow generator from selling calls or whatever it is, that's perfectly fine business. If you're going to have other businesses, like if you want to build a financial services company on the Bitcoin blockchain for the future, and you're going to have lending and you're going to have asset management, and then the digital asset treasury company is a piece of that. I think that's what Strive aspires to, ProCap aspires to that, Nakamoto aspires to that. That's harder because now you got the M&A part and you got to find the right businesses to bolt on for the cash flows. But okay, that's aspirational. Metaplanet, right? Board member, that's kind of more like MicroStrategy, but they have a huge advantage in that their cost of capital, because they're in Japan, when they get the prefs approved, is going to be monumental. So if you can borrow cheap and invest long, beautiful strategy. But to the point, the ones that do Solana or Ethereum, I'm struggling. Now, look, Tom Lee, he's a mad genius, and he's built a lot of wealth very quickly with BMNR. A couple of the other ones have done a little more of this. But the idea of people have reached out and said, hey, would you be interested in doing the dog ETF? I'm intrigued enough to not say no, right? I haven't said no to anybody yet, but I haven't jumped on it and said, okay, let's do this tomorrow. So the idea of, if I were going to do anything in the DAT space, I would want it to be on Bitcoin. So we checked that box. So I said, I'm involved in Metaplanet, involved in Naka. So I'm there. The struggle I have is Memecoin versus Bitcoin. Now some would argue, I'm not in this camp, but some would argue that, well, isn't Bitcoin just a meme coin? I mean, if it's just a store of value, if it's just something that requires a community to believe in its moneyness, because here's the interesting thing. Money. There's only been well, that's not true. In the modern era, there's really only been one money. Before the modern era, there were multiple monies. There were shells, and then there were stones, and then there was some metal coinage, so
Mhm.
to speak, before we got to gold. And it took a while. I mean, believe it or not, people were saving in shells, even though you could go find more shells, but that was the thing. They were scarce. So gold has worked for, many, many millennia. Okay. So money is an asset that exists in the absence of a liability. Everything else that we think of as money is not money. It's currency. Currency is different than money. And JP Morgan said it, and Saylor quoted JP Morgan the other day saying, he said in 1920s, gold is money, everything else is just credit. And that's true. And there have been 875 paper currencies in the history of the world. 3/4 of them no longer exist. They literally went to zero because they were fiat. They could be issued at a whim. The oldest today living still is the pound sterling. You used to get a pound of sterling silver for a pound note. Now you need about 174 pounds to get the same equivalent. So there's been a lot of devaluation of that currency. The dollar, like I said, went from $1 down to 2.5 cents. So the fiat world credit is backed by debt. And so the debt keeps accumulating and your ownership of it gets inflated, which again, who tries to convince people that 2% inflation is good for you? On what planet is over a 30+ year period taking half my purchasing power away good for me? On no planet. It's just a tax on the masses to the rich.
Right.
That's all it
Right.
is. So you could say Bitcoin is money. It's an asset that exists in the absence of a liability. And people say, well, but it has no intrinsic value. Okay, take that green piece of paper out of your wallet. I mean, I don't carry any, but if I did, I'd have a green piece of paper. If I was in China, it'd be red. If I was in Israel, it'd be yellow, but ours is green. What intrinsic value does that $20 bill have? None. I can't, in the old days, I could exchange it for gold or silver. I can't do that. I don't get a share of government revenues. I can't even give it to the government to get anything. So the only value it has is belief and custom. I can give it to someone and they'll give me something of value in exchange because they think they can give it to someone else. That is basically a barter system, but it's belief and custom. And in the olden days, if, let's say Leonidas, had chickens and I had cows, we would meet at the market and we would exchange our livestock. And we're like, geez, that is a shitty job, haha, pun intended, because they poop on the way. So, hey, leave the animals in the stockyards and we'll print little coins. His will have chickens, mine will have cows, and we'll exchange the coins. But the problem is the coins are heavy, and on the way to meeting, the banditos would come and steal our bag of coins. So we put the bag of coins in the bank and we carry around these pieces of paper, money. It's not money. It's an IOU. And because the money is actually in the bank. And so gold has been money. I believe Bitcoin is the money for the next 5,000 years. And because of belief and custom, if I give a Bitcoin to someone, they'll give me something of value. You could make an argument, and maybe this is the argument to try it. You could make an argument that dog could do the same thing. It's a derivative of an asset that in and of itself has no intrinsic value other than belief and custom that you can exchange it for something of value. The difference is, well, it's actually not. I was going to say it's a difference, but it's actually not yet. The difference is the original white paper was the peer-to-peer electronic cash. I could exchange my Bitcoin for pizzas, right? Like the guy did. And we love him for that. And everybody said, oh, he's such an idiot. No, we love him for that because it proved that it could work. So right now, Bitcoin's not used as a medium of exchange. Dog is not really used as a medium exchange. It's really just a store of value-ish. Mm-hmm. However, there is a world where, like, we have gold, we have silver, we have platinum, we have diamonds, we have other stores of value that kind of function the same way. So why couldn't we have Bitcoin as the apex predator coin, and then other things below it that are similar types of stores of value. Now, doing an ETF might increase the awareness. It would certainly solve the boomer wrapper problem, right? That people my age and above aren't going to memorize their seed phrase, and they're not going to want to deal with keys. And I know, not your keys, not your coins, fine. But tell my dad, right, 87 years old, that he doesn't own Bitcoin because he has a Coinbase account. My dad, he thinks he owns Bitcoin. I think he owns Bitcoin. I'm not going to hold his keys for him because if I lost him, then I'd be in trouble. But he's perfectly comfortable having a CeFi solution. In between TradFi and DeFi is CeFi, centralized finance. And you can debate all you want that that's not good. And so having people who own dog directly in a wallet, just like people who own Bitcoin in cold storage, better. But Bitcoin got a lift in terms of awareness and liquidity by creating the ETFs and BlackRock coming in and buying a bunch. I don't know. And said, because it's on the right chain, I'm at least compelled to think about it. And I don't know. So it's another long-winded way of saying it might work. It would have to be sold a little bit differently, but I think it could work.
It's the number 2 asset on Bitcoin, right? Like I think it's very hard to get past hey, it's like a puppy in a orange hoodie, right? Like I think people have trouble getting past that, but ultimately it's not that different than like Litecoin and Bitcoin in the early days. Litecoin was this beta to Bitcoin.
Yep.
It's just the number 2 asset on the Bitcoin network. And I think Bitcoin as a network is a lot healthier when you have a robust economy on it. So, we're gonna keep pushing forward, Mark. I don't know if an ETF is gonna happen anytime soon, but I think the goal eventually is to just do what Bitcoin did. Like Bitcoin has a template. You can buy Bitcoin everywhere in every different form. We just want to follow that. So we're trying to get exchange listings. We have bridges to other chains where people can trade wrapped dog just like they can trade wrapped Bitcoin. So we're going to continue pursuing different ways so that people can buy, dog in the way that kind of meets them the way they want to. I appreciate
it. And I admire, look, I admire what you guys have built. I admire the tech behind it because it makes sense to me. I admire the commitment to it. And I am a believer that, as you said very, very well, a robust network is what this is all about. Networks are actually really easy to value, and they are the most valuable thing on the planet. I say this all the time. What does Amazon make? They really don't make anything. They are a search engine that matches buyers and sellers and does some distribution. So, and that's oversimplifying, a very successful business, but they're a network. And when there were 2 members, it wasn't very valuable. When there are 1,000 members, not very valuable. When there are millions and millions of members, it's pretty valuable. Same thing with this. When one person had an iPhone, it wasn't really very valuable. When lots of people have iPhones, and what people forget, as great as the iPhone is, as great as Apple is, it's 19% market share. 80% of phones in the world are Android. And Google happens. And when Google bought Android in 2005, people laughed at them. Like, what the hell do you know about operating systems? They're like, well, it's like the key to everything. That was a pretty good bet. And I think there's something here. I think if people can really put aside the puppy picture, although I will say, whoever made the AI of me and the dog the other day, that one was a keeper. That was not bad. Most of the AI I hate. They make me look like Captain Kirk from Star Trek, but that was actually a pretty good one. I liked it. But you gotta get past that, and you gotta get past this idea of it's just degen gambling money.
Right.
And if it can be a facilitator for interacting with what I think is going to be the base layer of the Internet of Value, the truth net, then you're onto something. So
yeah,
let's keep talking and let's keep working on it. And I appreciate the opportunity to have this conversation. I appreciate you guys tolerating the old guy who doesn't really understand the tech, but is trying to keep up, and we'll see what we can do.
Absolutely. So we're coming on the top of the hour, and before we end up closing, I just wanted to mention that observing you over the past hour has actually been quite interesting because I can see just in your personality and your foresight that you really are a person that spots these early signals. And it's quite rare in these areas, especially within the financial markets, to find somebody who's authentically real like that and really educates the normal institutional, but most importantly, the retail investor out there, the people that, work paycheck to paycheck. And they're really thankful for this. I can tell just based on the viewers that are going to watch this. Whenever
Vincent, I appreciate that very much. It's funny. I say a lot of people think nice things, but very few either write them down and send them along or say them out loud. So I appreciate that. That's nice.
Yeah. And the fact that you were open to the thought of a dog ETF in the future is better than somebody who's chasing ETFs. And the reason I bring that up is because, say for instance, like Bitwise started the Dogecoin ETF. And obviously we know why. It's a high market cap, it's got a lot of attention. But the same thing can be said about Canary Capital with their Penguin MOG ETF. And the thing that I see common with all these ETFs is that it's what your friend said. It's like monetizing attention. And most of these had a time where people were really focused on them. And so they file ETFs. But you, just like you spotted Bitcoin way long ago, before it reached into the hundreds of thousands, when it was only 8, maybe even 5,000, you spotted it and you were open to it. And you were trying to educate people, the viewers on CNBC, hey, look into this. You should not ignore it. Potentially a good buy. And the fact that you're here now saying you're open to it, this is the reason what makes you such a unique individual. So with that said, I want to praise you there. Thank you for accepting it. So my last question is, looking forward into 2026, we're seeing Bitcoin native assets such as Ordinals and Runes and potentially Bitcoin DeFi. What in this evolving broader digital asset ecosystem, what developments do you believe will matter most from an institutional capital allocation perspective?
No, it's again, fantastic question. DeFi on Bitcoin is absolutely essential. I think we're past the point of legitimate institutional players saying, I can't own this asset, right? Harvard owns a whole bunch, and even Vanguard had to give in because their clients were yelling too much. So, that's going to happen. People are going to own the Bitcoin asset as a diversifying asset in their portfolio. What needs to happen is the ability to utilize the core asset, whether using it as collateral, which did just get passed, or borrowing against it, which, look, there are a bunch of great firms or some shady ones, but there are a couple great firms that got caught up in the whole FTX debacle. I will argue it was all instigated by the banks to take them down because they didn't like the fact that people were transferring money out of the banks. Okay. Well, now if you can hold your asset in the bank and you can borrow against it on chain, that'll be a really good thing. We've invested in some other Bitcoin denominated lenders that I think that's going to be a very important business. Being able to do DEXs and wrapped tokens, I think will be important. I do think this idea of a native currency that people can utilize on the primary chain, and in a perfect world, people say, well, that would be Bitcoin, but I just don't think the infrastructure of the slow settlement and the like make that work. I think you need another layer. The idea of something that's got more liquidity, more volume, more just more tokens that people can use at a buy a cup of coffee with it, and not worry about taxable transactions and things like that. So I do think something like Dog has real potential. It's funny. We're investors in Bitwise, and we love those guys, but to your point, they are opportunist in they did the crypto index, and then they got their Bitcoin ETF, and then they got their ETH ETF, and now they're going down the market cap stack. And, the challenge for them would be, something like Dog is still small, but small doesn't mean bad. It just means early. And, being early to a trend, as we've talked about, is the way to really win. It's just the law of small numbers. A lot easier to make big returns on small dollars than it is on large. So yeah, I think that DeFi on Bitcoin, lending against your assets, some clarity on taxes, I think would be helpful. We got the regulatory help that we need with the new SEC guys, so that's good. But generally speaking, I think I talk about the internet, right? The internet has a protocol stack, right? It's got TCP/IP and then FTP to move files, and HTTPS for websites, and SMTP for email, and www that kind of ties it all together. And that's not exactly right, but it's close enough. And you get the idea of this stack. I've gone back and forth with these mental models of, all right, well, is it Bitcoin is the base layer? Filecoin is the FTP. That didn't really work out exactly the way I thought. Is Ethereum kind of like the www dot? It's a toolkit that everybody can use. That kind of works. But then in the middle, there was no SMTP and no HTTPS, so that kind of broke down. Well, then there was what if we have a bunch of L1s and then we have bridges? Like, well, we have a lot of L1s. That's fine. But the bridges have been super vulnerable, and they break and they get exploited. And Chainlink guys are saying, we fixed that. I'm like, well, show me. Maybe you did, maybe you didn't. But if you did, it'd probably be worth a lot more. So something's still not quite there. And then there's the one chain to rule all chains, the Lord of the Rings. It's just going to be Bitcoin. But if it's just Bitcoin, I think we stall. I think we need a good L2. I think we need a good L3. Maybe we don't need L4 and L5, but we need some other things. And look, we tried, Bitcoin Cash and Bitcoin Satoshi's Vision and Litecoin. I don't think that works necessarily. And we do need to solve this feud between the, knots and something else. We need to solve that, because what inscriptions and ordinals and runes do, I believe, is valuable. And if we can't get agreement on that, I know you guys think it's valuable, but if we can't get agreement on that, I think it'll be a hard sell to get out of obscurity into mainstream.
Got it. Understood. I love that. Leonidas, I'm going to pass it over to you before we end it. What would you like to say before we close off?
That was an awesome interview, Mark. I think the Dog Army is going to really, really love this. So appreciate you taking the time. We could probably ask you 100 more questions, but
we'll do it again. No, after the holidays, we'll do it again. So, I wish you guys, and I wish everyone watching happy holidays. If you're going to travel safely, get some rest and relaxation to take on 2026. I think it's going to be a fun year. I think it's going to be a challenging year in some ways, but I think it's going to be a fun year. But it's the old song that, I'm old. So the future's so bright, I got to wear shades, right? So it really is. And I'm having more fun today. And I love my jobs that I had before. I loved working in not-for-profits. I love building asset management, but I'm having more fun today than I've ever had in my life. It's because I get to hang out with people like yourselves, visionary people, hardworking people, people who are trying to move us forward, build community, build following, and communicate in a good way. So it's just been an enjoyable conversation. I applaud what you've done and what you will do, and appreciate you giving me the platform to talk to the Army and maybe be a part of it.
Absolutely. The Bitcoin DeFi sector is really appreciative of what you've shared with us today. We've learned so much. So yes, that wraps it up, everybody. Ladies and gentlemen, that was Mark Yusko, founder, CEO, and CIO of Morgan Creek Capital. Mark, thank you so much. Thank you, Leonidas, for joining us, and we'll see you next year.
All right. Thanks, y'all. Talk soon.